Bitcoin. The word alone evokes a sense of excitement, confusion, and for some, even fear. It's a digital currency, a decentralized payment system, and a store of value all rolled into one. Since its inception in 2009, Bitcoin has experienced a roller coaster ride of price fluctuations, captivating investors and skeptics alike. In recent times, Bitcoin's value has skyrocketed, reaching unprecedented heights and sparking widespread debate about its future. Is this surge a sign of a paradigm shift in finance, or are we witnessing the early stages of a speculative bubble? Bitcoin's meteoric rise is impossible to ignore. From its humble beginnings as an obscure digital experiment, Bitcoin has emerged as a global phenomenon, capturing the attention of individual investors, Wall Street giants, and even governments. The price of a single Bitcoin has soared, turning early adopters into millionaires and sparking a frenzy of speculation. This rapid ascent has led many to wonder, what is driving this surge in value, and is it sustainable? To understand Bitcoin's price surge, we must delve into its underlying characteristics. One key factor is Bitcoin's inherent scarcity. Unlike traditional fiat currencies which can be printed endlessly by central banks, Bitcoin has a fixed supply capped at 21 million coins. This limited supply, coupled with growing demand, creates a classic economic scenario of scarcity driving value. Furthermore, Bitcoin's decentralized nature, operating independently of governments and financial institutions, has appealed to a growing number of individuals seeking alternative forms of money. The more people use Bitcoin, the higher the demand, and the higher the price climbs. This positive feedback loop has contributed significantly to Bitcoin's upward trajectory. Another factor fueling Bitcoin's rise is the increasing involvement of institutional investors. Initially dismissed as a fringe asset class, Bitcoin has gained legitimacy in recent years, attracting the attention of hedge funds, asset management companies, and even publicly traded corporations. Tesla's high-profile investment in Bitcoin, along with its acceptance of Bitcoin as payment for its electric vehicles, sent shockwaves through the financial world, signaling a growing acceptance of cryptocurrencies among mainstream institutions. As institutional investors allocate capital to Bitcoin, they bring with them significant resources, infrastructure, and market influence. This influx of institutional money has injected liquidity into the Bitcoin market, further driving up prices. The entry of Wall Street into the crypto arena is seen by many as a watershed moment, legitimizing Bitcoin as an investable asset class and accelerating its adoption. Bitcoin's meteoric rise has drawn comparisons to historical financial bubbles, such as the Dutch tulip mania of the 17th century and the dot-com bubble of the late 1990s. In both cases, speculative fervor drove asset prices to unsustainable levels, leading to eventual collapses that wiped out fortunes and left investors reeling. The question on everyone's mind is whether Bitcoin is destined to follow a similar path. Critics point to Bitcoin's lack of intrinsic value, arguing that its price is driven solely by speculation and hype. They draw parallels to the tulip mania, where rare tulip bulbs were traded for exorbitant sums, far exceeding their intrinsic worth. Similarly, the dot-com bubble saw investors pouring money into internet companies with no revenue or viable business models, driven by speculative mania and the promise of riches. Section 5. Bitcoin bubble or revolution? A contested debate. The debate over whether Bitcoin is a bubble or a revolutionary technology is fiercely contested. Proponents of Bitcoin argue that it represents a paradigm shift in finance, offering a decentralized and censorship-resistant alternative to traditional monetary systems. They point to Bitcoin's limited supply, growing adoption, and potential to disrupt established industries as evidence of its long-term value proposition. Furthermore, Bitcoin enthusiasts argue that historical comparisons to bubbles are flawed. Unlike tulips or dot-com companies, Bitcoin is a revolutionary technology with the potential to transform various industries, including finance, supply chain management, and digital identity. They believe that Bitcoin's price reflects its disruptive potential and that its value will continue to rise as adoption grows. Section 6. Regulatory landscape. Navigating uncertain waters. One of the biggest uncertainties surrounding Bitcoin is the regulatory landscape. Governments around the world are grappling with how to regulate cryptocurrencies, with some taking a more open approach while others remain cautious or even hostile. Regulatory clarity is crucial for Bitcoin's long-term prospects, as uncertainty can stifle innovation and deter investment. In some jurisdictions, regulators have taken steps to embrace cryptocurrencies, creating frameworks for trading and investment. In others, however, governments have expressed concerns about Bitcoin's potential use in illicit activities, its impact on monetary policy, and its potential to disrupt the existing financial system. The evolving regulatory landscape will continue to shape Bitcoin's future, creating both opportunities and challenges. Section 7. Technological Advancements, Scaling Bitcoin for the Future. As Bitcoin gains mainstream adoption, its underlying technology faces challenges in terms of scalability and transaction speed. The Bitcoin network can only process a limited number of transactions per second, which can lead to congestion and higher transaction fees during periods of high demand. To address these limitations, developers are working on technological solutions to enhance Bitcoin's scalability and efficiency. One such solution is the Lightning Network, a second-layer protocol built on top of the Bitcoin blockchain that enables faster and cheaper transactions. The Lightning Network has the potential to significantly increase Bitcoin's transaction capacity, making it more viable for everyday payments and microtransactions. As technological advancements continue to improve Bitcoin's functionality, its utility and value proposition are likely to grow. Section 8. The Future of Money. Bitcoin's place in a changing world. Bitcoin's emergence coincides with a period of significant change in the global financial system. Central banks around the world are experimenting with digital currencies, raising questions about the future of money and the role of traditional financial institutions. In this evolving landscape, Bitcoin is well positioned to play a transformative role. Bitcoin's decentralized nature, borderless transactions, and censorship resistance make it an attractive alternative to traditional forms of money, particularly in countries with unstable currencies or limited access to financial services. As the world becomes increasingly digital and interconnected, Bitcoin's unique characteristics could position it as a key component of the future of money. Section 9. Conclusion. Riding the Bitcoin wave. Risks and opportunities. Bitcoin's journey has been nothing short of extraordinary. From its humble beginnings as a niche digital experiment, it has emerged as a global phenomenon, captivating investors, challenging traditional financial systems, and sparking widespread debate about the future of money. While the future of Bitcoin remains uncertain, one thing is clear: it has already left an indelible mark on the world. Whether Bitcoin is a revolutionary technology or a speculative bubble is a question that continues to divide experts. The truth likely lies somewhere in between. Bitcoin presents both significant risks and extraordinary opportunities. As with any emerging technology, understanding the underlying fundamentals, assessing the risks, and approaching investments with caution is crucial. The Bitcoin wave is here, and it's up to each individual to decide whether to ride it or watch from the shore.